Hello, everybody, and welcome to our show today. So today we're going to be diving in. We're going to be talking about how to get a business loan with bad credit. We're going to be talking about a lot of different business loan and credit line options that can work for you if you are trying to build a business, even if you have credit issues. So if you're watching this live on YouTube or if you're watching this as a playback on YouTube, please make sure you like and subscribe. We have a lot of different topics that relate around helping you get credit and financing to be able to fund a business. And if you're listening to this on our podcast on iTunes, then make sure you if you're enjoying what you're listening to, please leave us a review. So let's dive in. Well, my name is Ty Crandall. For those of you who don't know me, I'm actually the CEO here at Credit Suite. At Credit Suite, we help businesses and business owners obtain business credit for their EIN number that's not linked to their personal social. We also work with over 1,000 different lenders and a multitude of different funding programs to help our clients obtain financing. So a lot of what I'm going to introduce you today are products that we actually work with that we've seen successfully work with people that have credit issues to help them get approved. Even if you don't have credit issues, there's a lot of options here you may not know about that can still get you very low interest rates on financing and can help you access even more money than you may think is even available. So I've got a link at the bottom of my slides if you are watching versus listening today, creditsuite.com/get funding. If you ever have an interest to see what you can qualify for, that's a quick link where we can take your information, cross-check it against over 1,000 lenders to find all the kind of financing you can qualify for. So look, turning to business credit to get the money to build your business is also a smart choice when you're looking to get money. Alternative funding sources can also help. So a lot of people I see make the mistake of trying to go to their bank to get financing for a business. And banks are great places to go because they offer SBA loans. If you're very well qualified, you have collateral and you have consistent cash flow per tax returns and good credit, et cetera. If you don't, then you probably don't want to go to what's called a conventional bank, your Bank of America, Wells Fargo, Chase, et cetera. You want to go to maybe an alternative funding source. That's another great way to consider getting funding. So although you might be tempted to go to the traditional lender or credit provider, as I mentioned, like banks or credit unions, the problem is that they are most likely going to deny a loan unless you're a very, very, very well qualified borrower. You have to have impeccable consumer credit. Your business credit has to be good. You have to have money in your bank account to even consider those. Otherwise, it's probably not going to work. You know, banks like Bank of America focus on very conservative risk. They have to. They're government insured, and the government requires they be very conservative with the money that they lend. And business lending is inherently just very risky because a lot of businesses don't succeed. So because of that, this is some of the reasons that conventional banks just may not work. You know, you have to look at it from their perspective. They're just being cautious. Again, they have to focus on very conservative risk. Now, the SBA does not lend money. A lot of people think SBA does lend money, but what they do is they set guidelines to banks to lend money, and then they basically guarantee those funds. So they basically go to a bank and say, hey, listen, Mr. Bank, if you lend this dude $100,000, we'll guarantee 90% of it. So if he defaults, we're going to cover 90% of that. We're going to give you 90,000 of the 100,000 if he defaults. So these guaranteed loans may help you get financing at banks. They help you get it at better rates and more flexible terms as well. But again, if you're newer, if you don't have pristine credit, if you don't have collateral to offset the lender's risk, then you're considered to be high risk, especially if you have credit issues. And this is why SBA and banks are fantastic places to go to get money. But if you have credit issues, if you don't have tax returns that show profits, if you don't have collateral, they're just not the best way, the best place to go to get money. So if you have to wait around until a bank or credit union would feel comfortable, well, then you're probably going to miss out on a lot of opportunities that it's going to take a long time to do. So this is why we want to have this presentation today, because today you want to learn about a bunch of other options that are available outside of what you may get at a bank. So even if you think you can't get bank financing, and you're probably correct, then you're still able to come in and get some of these other financing options that we're going to talk about. Okay, so if you're not able to get, or you don't think you're going to have pristine consumer credit and collateral and cash flow, and then what we're going to talk about is some other options out there that may work. So according to the Department of Revenue, most business loans and credit lines that are available today don't come from these big banks. So if you think that you need to be pristine to get financing, the good news is that over 98% of business financing is no longer coming from these banks. It's coming from some of these alternative options that we're actually talking about. Now, don't get me wrong, if you have consumer credit issues, just because I'm showing you options that will work for you doesn't mean you want to ignore them, okay? When it comes to getting business financing, the better your credit is, the more lines of credit and term loans and credit cards become available. So good business credit and good consumer credit are both assets, and you want to focus on building your business credit. You want to focus on fixing your personal credit so that opens up more funding options. But at least these funding options we're going to talk about today will work for you as a bridge until you're able to do that. So again, don't forget, when it comes to business credit, you can have bad business credit and still be able to build a good business credit profile, good commercial credit profile. Because with business credit, it's built under your EIN, not your personal social security number. Now, it doesn't happen overnight, okay, and it doesn't happen without you making a conscious effort to build business credit. But again, building business credit is a good way to go because you don't need to supply your social security number on an application, and you don't have to have a credit pull to get approved, okay? So that's a good option to consider because you can get $30,000, $40,000, $50,000 individual limit credit cards without a personal guarantee, without a personal credit check. You could do it fairly quickly. You can get to Visa, Amazon type credit cards in 60 days, 90 days. You can get the Visa, MasterCard options in about 6 months as well. So something definitely to consider. Now, business revenue and cash advances are probably the most popular type of financing that's out there today. And they're really based on you just having consistent revenue. Now, these aren't really loans per se. What they're basically doing is you're selling future receivables, future revenue to a lender at an actual discount. And this is called a bunch of different things: cash advances, merchant cash advances. I call it business revenue lending because it's based on the revenue of your business. But it's basically based on what lenders expect your future revenues to be. So what they're doing is looking at your past revenues, they're determining what your future revenues will be, then they're basically advancing you, they're giving you that future revenue now at a discount, and then you're basically paying them a fee to do so. Now, one of the nice things about this kind of financing is that it's very quick to get. You can get it within 72 hours. And I say that, but I'll tell you, we have a lot of clients that have gotten it within 24 hours. So again, it really, how fast you get any kind of funding, it depends on you, how fast you're getting the income documents that a lender needs into the actual lender. So revenue lending or merchant cash advances are a little bit different than what we call cash flow financing or revenue financing. And the biggest difference is that merchant cash advances only look at your deposits going through from Visa, MasterCard, or from your merchant account. Revenue lending or cash flow financing looks at all deposits in your bank account, including cash deposits and check deposits. And again, this is very popular as well as merchant cash advances because it's fast, easy money. All they're doing is just looking at your bank statements to verify your revenue. With actual cash advances, they're looking at your revenue, or they're looking at your merchant statements as well to see your Visa cards, MasterCard transactions, and they fund you that money within 72 hours or less, just based on a 6-month review of your bank statements or merchant cash advances. They want to see those merchant statements as well. Now, you're typically going to be able to get about 10 to 12% of your annual revenue. So if your annual revenue is $20,000, or well, it's not a good example. If your annual revenue has to be over $120,000 in annual revenue, typically, some sources will lend less than that. So if you have $120,000 in revenue, then 10 to 12% of that is about $12,000 to $15,000 is what they'll lend. So they lend you 10 to 12% of whatever your annual revenue is. So if you have $600,000 in revenue, that's a $60,000 loan. $400,000 in revenue is a $40,000 loan. Now, there's no collateral requirements with this, and a lot of lenders don't have any kind of FICO score requirements whatsoever. The ones that do will lend as low as a 500 FICO score. So no matter how bad your personal credit is, then you're still able to get this program. And the reason is because if they've seen that you can consistently make create revenue, and the revenue is growing from month to month, then that still makes you a low risk. So again, a lot of lenders don't have credit score requirements. Other lenders have 500 score requirements. Now, most of them are going to want you to be in business for 12 months or less. There are exceptions to this. With almost all kind of financing, there's what's called exceptions based on compensating factors. Now, compensating factors means that, for example, maybe you haven't been in business a year, but maybe you have really good personal credit. That's a compensating factor. Maybe you haven't been in business a year, but your deposits in your bank account look really good. They're well above $120,000 a year, and you have positive ending bank balances and no non-sufficient funds, etc. So good bank account management. So if you don't meet some of these requirements, you could possibly get around it if you do have one of those kind of compensating factors. But most lenders are going to want to see you in business a year, $10,000 a month in revenue, 10 deposits monthly or more, and you need to show a positive bank balance at the end of each month. Basically, they want to see that you're not negative on the end of each month on your statements. And the reason for that's kind of common sense, right? I mean, they want to make sure you have money in the bank account to pay them. If you're negative every month in your bank account at the end of the month, well, then you don't even have enough money to pay the loan, which is what their ultimate concern is. So once you paid back about half of this loan, then what happens is they'll offer you another loan. So if they lend you $50,000 and they gave you 6-month term, 3 months later, when you paid back $25,000, they would offer you even more money. Okay, and terms will get longer at that point. So typically in that example, now the first loan was 6 months, the second loan may be 12 months. So this is important. When you look at financing, I can tell you from experience, look at term first and rates second. You're always going to get a lower payment with longer term, better than you'll get a lower payment with a lower rate. So keep in mind, longer terms are good. And when you refinance it after you do one of these loans, they'll give you longer terms. They'll give you lower rates, helping you be able to get more financing. And again, about 70% plus of our clients come back and get this again and again, because it's just so super simple and easy to do. Once you've got the first loan, they typically will want to see 1 month's bank statement from you, and then in 24 hours, they will advance you more money. It's so simple to do, and the term keeps getting longer and the rate gets lower, so your payments don't go up a lot to get even more money, which is why so many people go with cash flow financing. So super fast, super easy money to be able to get based only on your cash flow. And I'm not positive, I can't remember if I'll go through some of these other options as well, but there's even sources like PayPal and Square that will do as much as 30% of whatever your deposits are that are looking just at their own accounts, like PayPal and Square accounts. So you can also use your existing 401k or IRA to get financing. And this is based on IRS proven strategy, so there's no tax penalties. Now you can get rates of about 5%. And even if you don't have a 401k, you can use a business partner, a guarantor, a signer, somebody else that maybe does have one. And you can get your funds in about 3 weeks or less. You can get a loan or a line of credit with this, but you can only get 100% of what's rollable in your 401k. So what's that mean? It means that if your 401k is currently with another employer, it's that employer's decision to let you borrow against or use that 401k. In a lot of cases, the employer says you can't, which means you can only get 100% financing against what's rollable, what's not currently with another employer. Now, there are no consumer credit requirements. They don't even do a credit pull for this. Even a startup business can qualify, and you don't need tax returns. You don't need bank statements. You don't need any kind of collateral to get approved. And again, you can get approved for as much as the 100% of the 401k. And basically, if you think about what a 401k is, you're investing in buying stock in other people's businesses. Well, with this, all you're inevitably doing is just buying stock in your own business. That's all you end up doing, is instead of buying it in another person's business. Now, again, a consideration here is that maybe you don't have a 401k, but maybe mom, dad, grandpa, grandma, somebody that wants to invest in your business does. And so 75% of business owners go to family and friends to get money for their business. Well, this makes it easier to do so. Instead of going going to mom, dad, grandpa, grandma, friend, potential investor and asking them for physical cash, you could leverage a 401k or an IRA. They still earn the interest. They still get the returns. The only thing that's different is the fact that if you default, then that they lose the 401k. So again, it's sometimes easier to get people to invest money into your business with this than it is for asking them for physical cash. Now, another option here is also stocks and bonds can potentially work as well. So another option is microloans, where you're not going to get these from regular lenders, and these aren't huge $500,000 loans, but microloans are great options to consider too. Now try the Association for Enterprise Opportunity to find a local micro lender. So you can find micro lenders going directly to the Association for Enterprise Opportunity, and you can find those at microenterpriseworks.org. Now, I can tell you the first time I tried to search this link, I didn't find it. The second time when I typed it incorrectly and Googled it, I was able to find it. So if you can't go directly to www.microenterpriseworks.org, no worries. Just type in microenterpriseworks.org into Google search, and you will find the link for the Association of Enterprise Opportunity to find a good micro lender. So micro lender is exactly what it sounds like. It's not going to be a huge loan. It's typically $500 to $35,000. But the clients that we survey, we find that 50% of them are looking for less than 10 grand anyway. So if you're looking for 5, 10, 15, 20, 30 grand to start a business, well, then these are great ways to go, because again, you can get up to about $35,000 with microloans. Now, there's a lot of government grants out there as well. What's nice about this is a lot of people just don't know about government grants. So it's free money. It doesn't have to be paid back. Since a lot of people don't know about it, then they're readily available in a lot of cases. They're kind of like a scholarship. It's free money. It doesn't need to be paid back. So these work very well to get money to fund a business, because you can get the money to start a business, and then you don't have to be making payments on it during that startup phase. So the government has a searchable database of available grants at grants.gov. So if you go to www.grants.gov, that's the government's database to search these actual grants. Now you can search under keywords which correspond to your industry. You'll find a lot of grants out there, and a lot of crowdfunding the same, has to do with the industry you're in. So you want to find industry specific grants for the industry you're in, if you can find them, or you maybe find general grants that may work for you. So again, type in creative words. If you're in software, then find 3, 4, 5 different terms to search for software to find the most grants that can fit your actual needs. Again, grant requirements aren't worded specifically or intuitively. So again, you may need to kind of mess around with your search term to find it. Not every industry may qualify. You might not qualify for a grant as a real estate investor, but you may to start a software company. So this is why you don't really know until you check. So act quickly for grants. A lot of them are only available for a short period of time, and you can apply for more grant at one time. Now you want to fill out the application as thoroughly, as correctly as you can. Keep in mind that with grants, a lot of them are issued based on the quality of what's on that application. So don't send an incomplete application. Take the time to do it the right way. So what's nice about this is that once you fill out one, a lot of the questions are going to be the same. So once you have kind of all of your answers logged, then it's easier to apply for even more grants using that same information. Now, HUD, or the Housing and Urban Development, is one agency which hands out these grants as well. If your business isn't related to housing or city development, you're not going to be approved. But if you are in a business that's somehow related to housing or development, city development, then these are definitely ones to consider. But if it is, then go to HUD directly. You can go to portal.hud.gov, and I'm not going to give you the exact link. You can take a screenshot if you're watching this. But again, this is where you can go to find government HUD grants, which are just different from the general government grants that we just talked about. Now, there's also called NOFAs, or Notices of Funding Availability, include the contact where you'll send the application. And if you apply for more than one HUD grant, it has to be a separate application. So you can't just figure out or fill out one grant or one application for a HUD grant and then use that application for multiple. You'll probably have to fill out multiple applications. Now, if you're in rural industries or rural area, then try the USDA, USDA.gov. If you go to USDA.gov /topics /farming /grants, dash and dash loans, or just go to USDA.gov, then that can help you find them. And if you're a rural area as well. So they don't just give out grants to ranchers and farmers. They also give out grants to energy companies, waste management companies, house preservationists, and providers. It's just really they're lending to people in these rural areas. So again, maybe you're not in a rural area. Maybe USDA won't work for you. Where I'm from in Indiana, these are very popular loans because it's all rural out there. So if you're in a rural area, then this is something to consider. You may be able to qualify for these USDA type grants. Now, state and local government has grants as well. And they also have cities and towns have partnerships and grant. So again, look around, do some research, check your local government websites, check your town, check your state, check the local government. A lot of the times they're trying to stimulate businesses in town because, residential follows, commercial, it kind of follows residential, and residential follows commercial, meaning if a company comes into a town and starts hiring a bunch of people, well, then that brings more people to live into the town, and that raises tax dollars. So it's in a town or city's best interest to promote business ownership. And a lot of them, whether it be town, whether it be a city, whether it be the state, your local governments have access to a lot of these kind of grants as well. So these are definitely something to look into as well as the federal grant. Now, a grant requires a grant proposal, and they operate a lot like a business plan. So a local address is usually going to be a bonus when applying for a grant. Look, a lot of the grants you find, and the research I've done for grants, a lot of them are very specific. They're for women-owned business owners in South Carolina. They're for people looking to start a business in Austin, Texas. So sometimes they're city-specific. Sometimes they're state-specific. Sometimes they're based on race, or whether you're male or you're female, or whether you're, a minority in a certain community. So they're very specific, a lot of these. So keep that in mind, that if you are in a local area and you're applying for local grants, your chance of getting approved is much better than outsiders. So look for grants in your area. You'll find a lot of grants that are state specific, and you're better or more inclined to apply for a South Carolina grant if you live in South Carolina than applying for a grant in Florida, for example. So write a clear and short cover letter. Don't ramble. Get to the point quickly. Again, I don't know about you, but when I get long-winded emails, they're usually the last ones I look through, and I'm usually just skimming them. So keep your cover letter short and sweet. You could do research on what the best things to include in these kind of cover letters. But again, putting a cover letter, making sure that you have a grant proposal, which kind of serves dual purpose for you. A good grant proposal, like I said, is very similar to a business plan. So by having a business plan, you're at least getting some kind of guided direction of the way you're going to take your business. And that's going to help you get a lot of different forms of money. But then you can modify that to be a grant proposal to open up these kind of grant opportunities. And check delivery requirements. Do you need to mail the application? Can you deliver it in person? Can you email it? Can you fax it, etc.? So grants are a great way to go. They don't need to be paid back. A lot of them are available in the local community. A lot of people don't know about them, so a lot of them are readily available. But look, first lesson to being a business owner here, okay? Maybe you're already a business owner. What you put in is what you get out. It's free money. That doesn't mean it's going to be easy. You're going to have to prepare a grant proposal. You're going to have to prepare a cover letter. You're going to have to do some research. But again, the people that are willing to dedicate that kind of time and commitment are the people that get the results. The people that go, man, it's too difficult to find the right grant, or it's too difficult to write a grant proposal, are usually the same people that are looking for the easy way out and aren't going to be able to get money. So grants are a great way to go. Having a grant proposal similar to a business plan, so you're going to use it for multiple reasons anyways as the business continues to grow. And again, even though it might not be the easiest process, once you fill out a grant proposal first, a cover or letter first, then you can follow a lot of that same language and same information as you go and find other grants. So it's definitely worth doing, especially considering it's free money that doesn't make you give up a percentage of ownership in your business to get it. So another great funding option is crowdfunding, and this is through platforms like Kickstarter or Indiegogo. Now, this funding gathers money from a lot of people instead of one big investor. So basically, you put a project up, and if the crowd on these sites likes your idea, well, then they may decide to donate to the project. So in order to do it, a good pitch is vital for success, and you really want to invest into a pitch video. It doesn't have to be professionally done. As a matter of fact, nowadays, all the statistics support that people prefer more of a real video that you're filming than a production quality type video. So generally, crowdfunding doesn't need to be paid back, but make sure you read the fine print, because many crowdfunding platforms will look at you if you don't meet the project goal. They're going to make you give all the money back if you don't meet the goal. So this is called fixed versus flex funding. With fixed funding, you don't get the money back, meaning if you set a goal to raise $10,000 in crowdfunding and you raise $9,950, well, if that was a real scenario, you should donate the other $50 to get yourself over the goal. But you get the idea that if you're short of your goal, they return all the money back to the investors. You get none of it. And with flexible funding, you may pay the crowdfunding platform more money, like Indiegogo, but again, you have the ability and the versatility to be able to, if you don't meet your goal, get that money back. Okay, so Indiegogo has a flexible funding option, for example, where that doesn't have to happen. Now, these guys get paid by taking a percentage of the donations that you collect. It's usually about 5%. And then you have to deliver on the promises. So if you say that, hey, the first 100 people that order are going to get the product that they're actually contributing money for, then you have to deliver whatever promises you're setting up. So just keep that in mind. People that don't deliver is what creates these weary investors. So straightforward businesses are not going to do so well. You've got to have something that donors can connect with. It's got to be something that's cool. It's got to be something that's different. It's got to be something that's not on the shelves yet, or something that's unique. Okay. Basic run-of-the-mill products and services don't really work for this. You're looking for something that's so awesome that people are like, that's awesome, and they share it on social media. They talk to people about it. They want to be part of it. So it's usually the unique type stuff that's going to get donors fired up, not the regular stuff that's already out in the marketplace, okay? So again, you want to evoke emotions. You want to get donors excited. You want to create urgency. Hey, look, you need to donate now, because if I don't meet the goal, then this thing will never get off the ground, okay? You need to talk to them about how it's, how the novelty of it, how unique it is, the scarcity, how you're the only person that's going to have this created. So again, if they're going to donate, if they like it, they need to donate now. Otherwise, it might go away. And again, a cool factor, something that's unique, something that's different. These are important because this is what makes something shareable. And crowdfunding platforms work because people share the information. It's not because you go and put a project up and all kinds of donations pour in. Your ability to succeed really depends on your ability to share across social platforms and have others share. So be courteous to people, even if the campaign fails, because you may run another campaign and those people may actually contribute to another campaign. Okay, set your goals. You got to figure out what the goal of the campaign is. It should be readily attainable and still be a little ambitious as well. And you want to line up your most significant dependable donors before you even start. And you got to share your campaign on social media. Look, I've studied a lot of crowdfunding campaigns. I've studied the biggest, most successful crowdfunding campaigns that ever existed. And there's two things that make every single one of them successful. One is they already had donors lined up before the project went live. And that's what created the virality. That's what created the project to go viral. Okay, so a lot of people think that projects just naturally go viral. That doesn't usually happen. What usually happens is that somebody puts a project up and they've already got a bunch of donors. The project goes live. Those donors pour in and start donating. Sites like Kickstarter and Indiegogo see all the traffic, all the donors. They highlight the project, and that creates more virality, and we're off to the races. The other thing that all these successful crowdfunding campaigns have in common is that people share them on social media. You're not going to put up a campaign and it go viral. It goes viral if you force it to go viral. So you need to have a network of people willing to share your campaign the minute it goes live, and you need to be sharing it on your social media campaigns. The more it gets shared on social media, the more donors you're going to get. So your ability to line up donors before the project goes live and share on social and get others to share on social will almost 100% determine the success of the campaign. So crowdfunding, a lot of these campaigns have perks. So consider what kind of perks you're going to give them. So for example, you probably want to create like 3 levels of perks, and you want to deliver them virtually versus physically. So what's a perk? A perk means if you donate this much money, you get this in return. If you donate $100, then I'm going to give you a free ebook on 9 different ways to do this, 9 different ways to use your widget. Okay, if you donate $150, then I'm going to give you the actual widget once it's created. If you donate $200, then I'm going to give you the widget in an autographed box. So those are what perks are. If you donate this one of these 3 levels, I'm going to give you this reward. Try to deliver them virtually, because anytime you have to mail something, it's going to have a cost and it's going to be considerably more difficult to actually do. So some things to think about with crowdfunding. So business credit cards. Now, again, business credit cards are available for businesses even if you have credit issues. Capital One Spark card is a perfect example of that. Okay, so you've got to pay these promptly, just like you do personal credit cards. You know, a lot of them, like Capital One Spark, report on the consumer credit report. So if you go more than 30 days late, then it shows on your credit report. And on business credit, even 1 day late hurts your score. So you got to pay these promptly. And again, if you apply with your social, then just keep in mind they're going to pull your personal credit. They're going to attach a personal guarantee. And again, your business credit card isn't helping you build business credit in a lot of cases if you're providing the social. In some cases, it does. So in some cases, like Capital One will give you a Spark card and it reports on your consumer and your business credit report. So it does help build your business credit, but it also hurts your consumer credit as you start acquiring a balance on there. Okay, so you have to keep that in mind. And you know, the best way to figure this out is to call them and ask them. Call them and ask them, do you report the credit to the reporting agencies, and who do you report to? Now, try to get to an underwriter if you can, which you probably can't. So then in that case, what I do is I always call and ask the same question 3 to 5 times. So if I call Capital One and say, hey, who do you report to? And they say, I report to Dun & Bradstreet. I say, okay, perfect. Thank you very much. I hang up. I call back and go, hey, okay, who do you report to? I have somebody else giving me the same answer. If they say Dun & Bradstreet, I say, okay, thank you very much. If I call back in 3rd time, I say, who do you report to? And they say Dun & Bradstreet. Well, then I know probably a good chance they report to Dun & Bradstreet. But if I call the first time and they say Dun & Bradstreet, the second time I call, they say TransUnion. The 3rd time I call, they say Experian. Then I have them get me a supervisor. And I say, look, I've called and asked the same question. These are what I've been told. Your reps have told me D&B, TransUnion, and Experian. I needed to know who you report to. So try to talk to 3 to 5 people. And if 3 answers are given, go to the person above it. Go to the supervisor and ask them. But the best way to find out where an account reports is to just simply ask them. The best way to find out when an account reports is to simply ask them. So when you're using business credit cards like vendor accounts, like Quill, well, the first time you use Quill, they might not report for 3 months. Well, you might not want to wait for them to report for 3 months. So ask them, where do you report? How often do you report? The card companies will tell you that. The problem is sometimes the information just isn't always accurate. So if your business credit card is reporting to the consumer reporting agencies, then keep in mind your consumer credit utilization matters a lot. It's about 30% of your consumer credit score. So if you put a balance on there and carry the balance from month to month, you can really hurt your personal credit scores. And here's why that's an issue. As your personal credit does get better, then the issue is that then as your personal credit does get better, then you don't have the ability to use it to get more money for your business. So try to not get accounts that report to the personal credit reporting agencies. Try to get ones that report to the business credit reporting agencies so you don't adversely affect that consumer credit utilization. So if you don't have a good enough FICO score, well, then consider building business credit, as we talked about, because, you know, business credit doesn't require collateral, cash flow, or good credit to get approved. So we talked about 401k financing and IRAs. And along with that line, you can also get stocks and bonds. You can use stocks and bonds as collateral to qualify for financing. But for those to work, you have to have some kind of collateral. We talked about cash flow financing and merchant cash advances. And by the way, if you have consistent revenue, even if you've been in open about 3 or 6 months or more, you can get even those with no credit check. So Fundbox, for example, if you go to creditsuite.com/Fundbox, if you've been in business 3 to 6 months and you have consistent revenue and good bank account management, they don't even pull your personal credit, and they give you an approval based on your revenue only. And maybe I'll cover those. Maybe I'm jumping to that so quickly. But again, you have to have revenue. Business credit's nice because you don't need consumer credit, cash flow, or collateral to get approved. It's a catch-all. Anybody can get it. So the very first step is you come in and you get what's called vendor accounts. And these are places like Uline and Quill that will give you credit even when you have none, and they report it to the business credit reporting agencies. Now, again, this is not for stuff you purchase all the time. You might not get shipping supplies all the time like you do from a Uline, or get batteries or first aid kits like you can buy from a Granger. But again, the benefit is that by building a business credit profile and score, it opens up a ton of credit as you start to move on to the additional steps. So vendor credit is super easy to get. It establishes a relationship with you and the vendor, okay? And then it also supports a lot of local businesses. A lot of local companies in your area offer vendor credit as well. So you want to get about 5 to 8 of these kind of accounts. And these, they won't give you revolving terms. They'll give you like net 30 or net 55. So Amazon has a net 55 account. They give you almost 2 months to pay the bill off. That's what net 55 means. They give you 55 days to pay the bill. Okay. So for example, I just applied for one of our businesses and got $6,000 right away. It was one of the businesses we just started building business credit for. And we only have like 5 accounts on our business credit reports, and we got a $6,000 Amazon account. So why, think about all the things you could buy at Amazon. I mean, almost anything you need for an office you can buy on Amazon, whether it be computers or office desks or any of those type of things. So again, a lot of vendors, Quill, you can get marketing materials, you can get a yard signs, you can get printing services done. So a lot of time you can get the stuff you need to ease cash flow while building a business credit profile and score. Now, again, suppliers reporting their positive experience to reporting agencies are creating what's called trade references. And these also can give potential lenders a clear perspective on your ability to pay. Look, don't be deceived. If you're going to get money for a business, they're going to pull your business credit. Even places like On Deck that offer merchant cash advances and revenue lending pull your business credit and make denials based on it. So by building business credit, you really increase your likelihood of getting loans because you're adding these kind of trade references to the business credit report. Okay, so keep in mind that this helps you to be able to get more money. So you can even get references from other people and put them on your business credit reports as well. So, for example, such as utilities and some of these other sources that you're using from day to day. So it gives you the ability to have to make it easier to get approved for more credit as you continue to grow. Now, as you get about a handful of those kind of vendors, we'll then move on to revolving store credit. Okay, this is places like Walmart, Amazon, and again, you're going to find most of the stuff you need. This is the biggest mistake I see people make when they're looking for money for a business. The biggest mistake I see business owners make is I talk to a business owner and I say, how much money are you looking for your business? And they say, I want a loan or a credit line for $50,000. And I say, okay, well, let's break this down. What do you need the 50 grand for? And they say, I need 10 grand for furniture. I need 10 grand for computers. I need 10 grand for payroll. I need $10,000 for office supplies. And I just want, an extra 5,000 laying around. And, that's actually 45 is what I need. Well, then in that case, you don't really need a loan for 45 grand. What you need is a credit card to get computers. Dell, Apple, Best Buy would work. And those are super easy to get. Okay. Then you need another credit card for furniture, which could be IKEA or Amazon. Again, fairly easy to get. So now 20 of the 50 you say you need, we just got through store credit cards. Okay. Then you need 10 through payroll. Well, that you can't use a regular credit card for. So that you are going to need money for. So when we look at it, the computers, the office supplies they can get at Staples, Office Depot, they don't need 45. What they really need is they need 10. All they really need cash for is payroll. The rest of it, they can use the Amazon, the Apple, the Dell, the Staples, the Office Depot credit cards for. So when you look at it this way and you break down what you need money for, it's easier for you to get the money because, guys, Staples, Office Depot, Amazon, these are not hard credit cards to get without a personal credit check and guarantee. If you follow the right steps, you can get those in about 60 or 90 days. So you can get the money for office supplies and computers and furniture and all those things. Then what do you really need cash for? Well, I need it for payroll. Do you really? How many people are you hiring? You're just starting a brand new business. So don't think about how much money you need overall to fund your business. Break down what you need money for, and you'll find business credit can be used to buy 85 to 95% of what you need. So once you have that vendor credit, you start getting credit with most of these stores. Okay. And again, You don't have to use your personal credit quality to get approved. So some of the first places that you're going to work with, again, are going to be people that will give you credit and will continue to give you credit throughout the life of the business, which makes it really, really, really simple and easy to be able to use. Now, sometimes in order to establish good store credit, you'll just have to buy some things you don't need, and sometimes you don't. And this is again, a mistake I see people make, is they're trying to just get credit just to get to a Visa card, which is ridiculous. Because if you look at business credit reports, they show the recent amount of credit you're using. So if you want to get $20,000 limit credit cards, you can't do it spending $100 on the credit that you have. It won't work. Nobody's going to give you a $20,000 limit if the highest amount of credit you've ever used is $100. So the more credit you use, the higher the limits you get on future accounts. So a lot of people say that. I had somebody the other day on our live stream and said, hey, look, I can't get a $10,000 credit card to get to the cash credit cards. Well, of course you can't, because you're only spending $100 or $200 on the credit card you have. How do you get around it? Get credit cards you're actually going to use. The reason I applied to just get that Amazon credit card, and it's the biggest credit card we use here at Credit Suite for our main company as well, we buy a bunch of stuff on Amazon. It's not uncommon for us to spend, $5,000, $10,000 a month on Amazon. So we have an Amazon credit card because that $5,000 or $10,000 a month we use shows on our credit report. Now our credit report sees, or the other credit issuers see we're using 10 grand, and they give us a $10,000, $15,000, $20,000 limit account. So as long as you're getting credit that you're going to use and you use the credit, that's the key to getting these limits to be higher and higher and higher. So you want to get credit at places that sell things you do need, so you could build the good payment history and get access to things you really do need to be able to grow the business. Now, if you have about 8 or 10 accounts reporting, you can get fleet credit, Visa card, or you can get, WEX fleet cards, RGS fleet cards, BP, Chevron, Sunoco, et cetera, to be able to get gas and fuel and auto vehicle repairs and maintenance and all those type of things that you can get as well. And then you also want to then continue getting more accounts. Okay, so look at the vendors that you usually get stuff from. A lot of local companies. So one of our clients got a $75,000 at a local roofing contractor. Doesn't matter to you. You may not deal with roofing, but in her industry, she deals with roofing. So $75,000 line of credit is a really big deal. Another one of her local vendors just gave her a $300,000 line of credit. So again, who are the vendors, the people you work with regularly? What's nice about them is even though they might not report to the business credit reporting agencies, as you build business credit, a lot of them use and pull that business credit to determine and extend you credit lines. So what do you need to use the money for? If you, for example, need cleaning services, well, what local cleaners are in your area? Go to them and ask them, hey, do you issue credit lines? I'm a business owner. And in a lot of cases, they'll just give you one. And in a lot of other cases, they'll pull your business credit reports to determine which ones they're actually going to be able to give you. So when you have about 10 to 14 accounts, preferably 14 accounts or more, then you move to Visa cards, MasterCards, what's called cash credit. And this is accepted more places, right? So you can use a Sam's Club MasterCard at Costco, for example. You can use it anywhere versus just use it at a particular store. Now, you can also come in and get auto vehicle financing at this point as well. So keep in mind, if you make a list of all the things you need, there's very few things that an Amazon, Walmart, and a regular Visa card can't buy you. 99% of whatever we spend money on, we could pretty much use a Visa card, an Amazon card, and a Walmart to buy just about anything else that we possibly need, right? Because what we can't find at Walmart or on Amazon, we can use an actual Visa card for. And then again, a lot of times this helps make it easy for you to fill that void and get the money that you need to get that you can't just use with actual store credit. So again, this also makes it easier for you to be able to get loans too, because it kind of serves as a short-term cash loan for a business, but it's actually even better. It's more like a line of credit. And the business receiving the loan can continuously draw from the bank. So think of it like that. This is a really good way to get a line of credit or a loan for your business just using a Visa or a MasterCard. So again, you've got to have what's called payment experiences. A lot of people mess this up. When it comes to building business credit, it doesn't come down to your time in business or the revenue you you have, or the collateral you have, or the credit you have. What credit issuers are looking for is how many trade lines you have. We refer this deep within the industry as payment experiences, which is the reporting of an account to the business credit reporting agencies. Okay, and some of them will want you to have enough time in business, but again, a lot of them will base it on the payment experiences that you actually have. And as you start to obtain better business credit, it opens up the door for you to be able to qualify for loans as well. And again, don't be mistaken. Don't be deceived. Just because you build business credit doesn't mean you're going to walk into Wells Fargo and get a loan. You won't. It'll make it easier to get a loan from Wells Fargo, but loans are just going to look at other factors other than just business credit quality, but it will make it easier for you to access that financing as well. Okay, so again, it makes it easier for you to get financing, and it also makes it easier for you to get, it helps you obtain a bunch of capital along the way. So again, look at all the options when it comes to getting financing, even if you have credit issues. Consider funding sources that aren't even loans at all. Don't look at banks. Don't look at conventional banks, for example. Unsecured business financing or government grants are a great option. We've talked about a lot of those. Try crowdfunding, 401k or cash flow financing. We talked about 401ks and IRAs, but there's also stock financing, which we didn't talk about, stocks and bonds. So maybe you have stocks or bonds. Mom, dad, grandpa, grandma, friend, potential investor has stocks or bonds. Here's what I like about this. Again, 75% of business owners get money from family and friends. If I'm going to go to dad and ask dad for money to help me start my business, it's easier for me to go to dad and give him some options. I go, Dad, look, I need 20 grand to get this business off the ground. I'm hoping you can help me out. There's a few things we could do. You could give me a loan and give me the 20 grand. I'll pay it back to you in payments with interest. And you could do it differently, but this is how I would do it if I were going to my dad. And I'd say another option is, do you have a 401k, IRA, or stocks or bonds? If you have stocks or bonds, I can use those as leverage to get a credit line for 20 grand. Okay. And the only way you're at risk is if I don't pay the bill. Then they come after the stocks and bonds. But as long as I pay back the financing, then you could still keep your stocks and bonds invested where they are. You could still earn interest on those stocks and bonds. And then I basically get the money I need without you coming out of pocket with any money. So 401ks, IRA, stocks, bonds are great ways to go. Microloans. We talked about a source where you can get microloans as well, which is a great option to go. And again, don't forget government grants, but don't forget about city grants. Don't forget about local grants. Don't forget about state grants. Don't forget about grants that are based on your industry as well. And again, business credit is one of those things that can help you too, because you don't need cash flow credit collateral. You can get it as a startup. You don't need to have a personal credit check. You don't need to have a personal guarantee. Every positive payment experience will help you. Now, some bonuses we didn't really talk about here. Again, what I mentioned, creditsuite.com/fundbox. Fundbox is a great way to go. If you've been in business for 3 to 6 months, you have consistent revenue, good bank account management, you can get approved on that link, creditsuite.com/fundbox, with no credit pull. If you manage your bank account responsibly, have more money going in than going out, and don't have a bunch of non-sufficient funds, have a positive ending bank balance, go to creditsuite.com/fundbox. There's no credit pull, so why not find out what you can qualify for? A little tip is that if you do have tax returns, once you get your approval, if you're willing to send them the tax returns, they'll typically give you a higher approval. A buddy of mine is in the credit repair business industry, high-risk industry. We just got him $30,000 at less than a 5% rate with that program. A great way to go. Okay. And at creditsuite.com/funding, we have other options that are similar. 3 to 6 months in business, as low as a 620 credit score, they can actually get you lines of credit. I mentioned PayPal and Square. Put money through PayPal and Square. If you're not using them now, use PayPal and Square, because PayPal and Square will lend you up to 30% of the money that you process through them every year. So if you process $100,000 through PayPal, they'll give you $30,000. Remember, with revenue lending, they'll only give you 10 or 12% of your annual revenue. PayPal and Square give you 30%. They have a set fee, like $500 or so, so their fee's super cheap. They have no credit check, no credit pull. They don't even pull your personal credit. So a great way to go as well. If you have inventory, if you have equipment that you own free and clear, those can be used as leverage to get financing. You can even buy equipment with a first month's payment and last month's month's payment down as down payment with about a 580 FICO score. So another great way to go. If you're an insurance agent, there's book of business financing. You can use that to start an insurance agency or to actually obtain an existing industry or existing insurance industry is a business as well. If you have account receivables or if you have purchase orders that you need purchase orders filled or people pay you money over time, those are great options to get financing as well that we didn't even talk about. So I'm giving you like an extra 12, 15 bonuses here as we get ready to wrap up. So those could work well. If you're flipping homes now, well, then there's house flipper financing where you can get financing to flip homes. You do need about a 660 FICO score and some experience flipping homes. So that's one of the higher credit score requirements during today that we've talked about, but there are some options there as well. So a lot of options we've talked about: stocks, bonds, 401ks, IRAs, account receivables, purchase orders, inventory, equipment. We talked about book of business financing and house reseller financing. We've talked about grants, local, city, state, government grants. We talked about HUD and USDA and all these other different places. We talked about microloans. We talked about business credit. We talked about credit cards that aren't necessarily business credit cards that may report to the consumer reporting agencies like Capital One Spark Card. We talked about merchant cash advances, and we talked about revenue lending and places like creditsuite.com/fundbox where you can get credit lines less than 5% without even having a credit pull. So a lot of options that you have, even if you have credit issues, to be able to get financing. And even if you don't have any kind of cash flow credit or collateral, never forget that business credit can still work for you. So if you have any questions, then please reach out to us. Let us know. 877-600-2487, 877-600-2487, info@creditsuite.com. That's info@creditsuite.com. You can also go to creditsuite.com/getfunding. If you fill in your information there, you'll talk to somebody on our finance team. Our finance team doesn't charge you any money to get financing, but the lender will charge you their normal rates, terms, fees, points, whatever it may be. But we don't charge you a dime, and we help you find all the financing you can qualify for. If you do have guarantors that have better credit, don't forget there's a great option there as well. We have an unsecured financing program where you can get up to $150,000 in financing as a startup with 0% rates just because you have a guarantor. And the credit all reports on the business credit reporting agencies. So you build your business credit as well as get up to $150,000 in financing, which is really cool way to go. And the best part is, since all the credit reports to the business credit reporting agencies, then the guarantor won't even have any of the credit you get report on their credit report. It helps you build business credit. The only time they're adversely affected is if you default on the credit, then it shows as collections, then they're liable. So, you know, okay, being a guarantor means they're the one taking on the liability in case you default. But if you pay as agreed, then you can get anybody, grandma, mom, dad, Uncle Larry, your friend, which I had an Uncle Larry. I love him. I miss him. But you can use your family, your friends. You can use any of these people to sign as guarantors to be able to invest in your business as well. And again, you don't hurt their credit unless you default. So a bunch of different options to consider. We can help you with most of these options. We even talked about crowdfunding today. I forgot to mention that in our wrap up. So if you want to talk more about all the financing you can qualify for, how to build business credit, feel free to give us a ring, 877-600-2487, info@creditsuite.com. You can go to creditsuite.com/getfunding for a quick look of all the financing you can get now as well. And again, if you're watching on YouTube, like and subscribe. If this makes sense, like and subscribe to our channel. That way you'll be alerted every week when we go live, and we continue to give you more tips, tactics, and tools to be able to obtain financing to grow your business. And if you're listening on iTunes, then make sure that you give us a review. And if you're watching on YouTube, listen on iTunes. If you're listening on iTunes, like us on YouTube. Thanks, everybody. Hope you got some good information. Have a great day. I look forward to talking to you next week. And I can't think about off the top of my head the topic we'll cover, but if you go to our YouTube channel, you can see all of our streams are scheduled usually many weeks in advance, so you'll know at any given time all the topics we're handling or we're covering. Thanks, everybody. I look forward to seeing you next Tuesday at 1 o'clock Eastern here on YouTube. Thanks, everybody. Have a great day.